Welcome back. Well, for the markets, it's turning out to be a little bit of a lower session as we speak for the Nifty. So we're down around 110 points currently for the Nifty, down around 0.4%. And there is a little bit of profit booking which is seeped into the key indices such as the mid-cap index, which is down around 0.2%. But really taking it on the chin now is the Bank Nifty, which is down around 0.3%. Stocks such as Infosys are now showing cuts, aggravated cuts of around 3% at this point in time. But let's talk about one particular stock, Capacite Infraprojects, which reported their Q2 numbers. Revenue was up nearly 25%, while the margins came under pressure. The profit after tax grew around 10%. We have Subir Malhotra, who is the whole-time director at Capacite Infraprojects, joining in to discuss the quarter gone by now. Mr. Malhotra, thank you very much for taking the time out. Just wanted to start by asking you about your full year guidance, which was around 20% earlier. For first half, you've done around 13%. How much are you expecting in terms of growth in the second half? Enough to get to that 20% mark, or do you think you have to scale back your guidance?
So thank you for having me on the show once again. And so first things first, this is amongst one of the best Q2s that the company has ever had. Q2s are always a little tough given our kind of business when, you have rains affecting the operations in a major way, and especially with the extended monsoons in this year. But given that, we have closed this quarter with 650 crores. This is up by almost, 18% on an EBITDA part. And we are standardly in the same margin of around about, 7.5, 8.5 for PAT also. Coming back to your question of do we want to change a guidance? No, not at all. We are very positive on how Q3 and Q4 pans out. These are always the best quarters for our industry.
Okay, so you stick to your growth guidance of 20%.
Oh, yes,
the second half will be better than the first half.
Oh, yes.
What about your order inflow? Year to date, it is at 3,464 crore rupees. Your full year guidance was 3,500 crore rupees. Is it safe to say you will be able to exceed it by a wide margin? And if yes, what is the guidance right now? What are the projects you are L1 in currently?
So, yes, we are already at 3,400, a little over 3,400 crores for the order booking this year. We had a 3,500 guidance, and we've just become L1 in one of NIIT Mumbai's fast track project, which we have just, got around maybe a week or 10 days ago. Still have to sign the final work order, though we've got the letter of intent already. So, exceeding the order book by a wide margin is definitely on the cards. I won't really like to comment on how much we will exceed it by, but it's quite obvious that we will exceed it by a wide margin.
Okay. Just give us a sense in terms of what the order inflow is looking like for you all in terms of the second half. Sonal did mention how much you are L1 in at this point. But if you could just give us, more qualitative idea in terms of where you are seeing orders coming from in terms of the inflows. What is the competition like? Is it more than what you probably saw same time last year?
So let me answer the question this way. First things are that quarters 2 and 3, as I said, are the prime quarters as far as our operations are concerned. And existing jobs from their present revenues are really going to boost revenues in the quarter 2 and 3, taking it back to the whole yearly guidance as far as the turnover is concerned. Yes, we have a lot of orders as far as real estate is coming in from Delhi. We have humongous amount of order booking which will happen from the government orders, especially with the, Central Vista projects which are coming up now. And each of those orders are now like 3,000 crore plus orders. There are humongous amount of opportunities which real estate is and Maharashtra government is itself presenting to us in Mumbai and around Maharashtra.
Okay. Mr. Malhotra, since you are talking about a lot of orders which would come by, you're L1 in a couple of them as well. What is the balance sheet situation currently? What is the debt, the cost of debt? What is it right now? Will you be able to bring it down further? You did see some few rating upgrades that came by. And what is the cash situation, receivables, especially from the government organizations?
So, multiple questions, so I'll divide them up into multiple answers. So, question number one, that as far as the balance sheet is concerned, we are where we are with our EBITDA, which was fantastically placed in this quarter. I've already told you the PAT numbers were great. We have also said that as far as an yearly guidance is concerned, we are sticking to 20%. And as far as debt is concerned, we are happy to come back to say that we have reduced gross debt in this year. We had, I think, a 420 crore debt, and we are now 407, something in that region. But we've drastically reduced debt, and we intend to reduce debt by a gross of almost 10% in this year itself. Our net debt to equity, for which I have always been, telling the markets that Capacity is very touchy about, is not more than 0.1, I think, at the moment. It's 0.11 or zero point 0.1 at the moment. So yes, we are very positively placed as far as debt is concerned, and as far as the balance sheet is also concerned.
What about receivables? Are you getting that on time, especially from the government sector?
14, 15 days. Gross receivables have come down to 14, 15 days. Debtor cycle has come down by almost 21 days in the last year. So as things move in the manner that our numbers are showing, all these things will take a turn or are taking a turn only for the better.
Okay, just quickly, you mentioned that Q2, this particular Q2 has been one of the best Q2s that you've ever had.
Yes.
Is that a sustainable trend going forward?
As far as we see operations coming up in the next 2 quarters, undoubtedly, yes.
Okay.
Okay, all right, Mr. Malhotra. Thank you so much for joining in today and giving us all the details on the projects going forward and the order wins as well. With that, we'll slip into a short break. But before that, a quick programming note for our viewers. You don't want to miss this at all. Meet the new team at CNBC-TV18 live at 3:30 p.m. today. Watch as the new anchors make their debut.